I just secured 28R in less than 40 minutes. But I make a big mistake. So before you get too excited for me, let me tell you two things. Why I make a mistake, and that's why I'm not entirely satisfied with this result, as well as what I learned from this. So let me just have a look at this MT5 history. Let's see whether you can see. Hold on, let me get closer. Okay, so as you can see, there are a total of 4 line items, but in reality, it's only 2 trades. Because my habit is actually to break down my trades into 2 portions, 20%, 80% proportion, such that I can take partials of 20% first and 80% at the main TP profit. So if you can see back into this one again, right? I'm risking $112 to be precise per trade. So the second trade, I actually take profit around 3.5k. So the first trade was a loss. It's a 2 attempt for this trade to materialize for the day. Okay. So let me just briefly explain how this go about. So this is a classic breakdown setup using my BRS3 1 minute breakdown strategy. Let me just give a glimpse of this. For those of you guys who follow my stream, I actually break down my strategy into quite a number of them, 12 of them, and out of 12 of them, there are only 5 they are A plus setup. So meaning to say, as long as they are A plus setup, that's when, in my previous video whereby I taught the risk management, they will get special treatment, and as long as my daily drawdown is less than 7k, I will execute them regardless of what, because they don't come by frequent. And then when they come, we have to leverage on this alignment of all the stars and trade accordingly. So this is under the BRS3 setup, right? But this is actually under the 1 minute time frame, which allow me to have a more precise entry, resulting in on average 10 plus R every time when I execute a trade. Although the win rate is 25% or lesser, the thing is, I just need to be right 5% of the time, and I'll be profitable in the long run. Not to say this time round, I only attempted 2 tries, right? 2 attempts, and the second attempt succeeded. So let me just show you how all the conditions will align. Let's go back to PUSD trade. Let me just lower this slightly so that you guys can see clearer. Okay, so for this PUSD trade, I've been looking at it for quite some time. The main thing is we have to look at multi-time frame alignment to actually capitalize on such a big push using this 1 minute sniper entry. So in the day chart, we know for sure that although this is like an uptrend, you must bear in mind of something. You must bear in mind that this structure over here, which is the day order block, it is not holding the price anymore, right? From the moment it entered in this order block, in fact this order block starts from here, right? We know for sure that this order block most likely is not holding, because if I look into the 4-hour time frame, right? Let's go to daily, then we go to 4-hour time frame so that I can explain bit by bit. In the 4-hour time frame, you notice that most of the structure that's holding the price up, like for example high, this structure got breached, right? This structure got breached. Even this small little structure over here, this structure subsequently got breached. So you know in 4-hour time frame is going bearish. What about the 1-hour time frame? Okay, the 1-hour time frame, let me just put it over here. The 1-hour time frame over here is also at the point about going to break down as liquidity are building up at this level over here, right? Look at here, 1 touch, 2 touch, 3 touch, 4 touch, 5 touch, total of 5 touches, right? Including this area. That's where I took the trade. So in the 1 hour, 4 hour, daily are telling me the story that this most likely will break down. And confluence with Elliott wave theory, if you look at this 1 hour chart over here, this is a classic WXY/XZ pattern. Let me illustrate. If you look at this, the highest point is actually here, whereby price action do a retracement to form the X wave, and all the way down to form the Y wave. And this X wave is somewhat similar in sizing to the previous X wave over here, right over here, goes to show that if there will be the price impulse movement, it will tend to replicate the magnitude of this in terms of FIB extension. So what I mean by it will base on the FIB extension of this Y wave. So long story short, my TP is actually 618 initially. Okay, let me just tell you exactly what I did. So my extension is at least at minus 0.414 because this is a FIB extension that I backtested several times over my 10 years of experience. I noticed this extension tends to be a target that will be fulfilled a lot of times when it is a valid breakdown. Valid breakup, breakdown that is how it goes. And to be precise, I set slightly above because I know that maybe it will hit slightly off by a little bit, so I have to be careful. I set at 618. Let me have a look again. I think I set at 618. Yes, 618. Let's see. That's the original TP that I set for this trade. Not sure whether you guys can see. Can see? TP 618. 31618. Okay? So that was the original TP target that I set for myself due to the understanding that this is going to be an extension of this Z wave. Okay, the problem is something happened very quickly that caused me to waver a bit and secure my TP at 28R instead of the original 52R. Let me just get to it. Let's go back to the 15-minute chart, how I entered the trade. So with this in mind, I already have the trade plan that it is going to break down because there's other signs that after sweeping this area, price action is not showing sign that it's a liquidity sweep to push to the high side, especially when it touches this 4-hour liquidity. Later I will go through this. So the first setup that I trade over here, right? The first setup I took is when, let me just go one by one. Price action, right? Solid close over this liquidity zone over here, right? 50-minute solid close over the liquidity zone. That is when I go to 1-minute chart to look for my setup. So the first setup is when price action, right? When price action retrace, right? Retrace, breakdown, retrace, and form an engulfing candle, right? That is when I took my first entry. You must bear in mind that this winning rate is actually quite low. It's around 25% or lower, and that's the reason why it's a high risk, high reward. You just need to be right 5% of the time to be profitable. And I allow myself the maximum of 2 tries. So once I attempted 2 tries for this breakout and it doesn't work, I will stop attempting the trade setup. That's how I trade this kind of high risk, high reward setup. I don't go through a crazy thought process of, oh, this is going to be a 20R. I will keep trading again and again. I lose potential 10R. I won't do that. I only use two bullets to try to secure this 10R plus setup. So the first bullet, as you can see, I enter here, but it didn't work out. I got stopped out. So that's when I take a step out of the market and observe when will I have a chance for the next entry. So I was patient, I waited. That is when I noticed something. It swept the 4-hour liquidity over here, right? It swept the 4-hour liquidity over here. Then I thought to myself, most of the time, when price action sweep 4 hours liquidity, there are only two scenarios. It's either price reverse very drastically, right? It will reverse very drastically for this 4-hour liquidity, or it could be a potential big breakdown. There's only two scenarios. So how am I going to know which scenario it is? I waited for a proper 1 minute change of character to the upside and change of character back to the downside again. Then I wait for a retest of the order block and enter at the first 1 minute engulfing candle. So if you look close enough over here, okay, I waited for a 1 minute change of character in the upside, and then 1 minute change of character to the downside. This is actually a change of character, if you notice. A very small change of character because this action is not holding the price down. And when price action retests to the order block over here, look at this. This perfect 1 minute small order block. What I do is I waited for a 1 minute engulfing candle and enter right here, right? With a stop loss just slightly above the order block as a buffer for entry. Okay, one thing is, although my original TP, right, was 52R, I would say I got too hasty, and because the price action was so fast. Let me just use this replay speed so that you guys understand what I meant by it. Just dipped. Look at this. The price action was so fast. I was looking at my chart and I looked at this. What happened? I was up like 10R suddenly for my MT5, and I looked close enough. There was no news. If I look at the calendar, there was no news. No Euro news, no USD news. The only news is the CHF that has not even occurred yet, because the entry we entered was around 12 p.m. We entered around 12 p.m. To be precise, we entered the trade at 12:39 p.m. Singapore timing. Right? And it went so fast all the way down and reached a point whereby I tell myself, I'm already up 28R. I do not want to sacrifice any potential snapback, because you must know that when price action was running so fast, there's a very good chance that there will be a snapback in price action, right? Snapback means sudden push up and liquidate all your profits. And the second thing is, my original plan is to trade the 5 minutes structure. So at this point, right, let me just go through. At this point of time, my trail, based on my original rule, my trail is still up here. But the price target is already here. There's no structure that has been formed, right? In a 5 minute which allows me to trail based by rule. And that's when I got too short-sighted and too hasty in making a decision that I just close the trade based on at 1.32, which is a whole number, because most of the time whole number is a psychological support. So at this psychological support, I decided to close literally all the trade. when I saw some retracement over here. And that was a big mistake. That was a big mistake. You know my original R? My original TP is here. As you can see from my MT5 over here, my original TP is here. Right? My original TP is here. 618. But I didn't follow my rules because of the condition that happened. So pointer to note is, next time when price action was moving so fast, and based on your original rule, it kind of like vary a little bit, at least you should stick to trailing your stop loss based on 1 minute structure instead of just closing all the way. So 1 minute structure, look at this. If I didn't close here, I trail according to 1 minute BOS structure, which means as long as there is a breakdown structure, as long as there's a breakdown, I will continue to trail, right? I will continue to trail based on the structure of this high, right? Once you break down over here, I continue to trail based on this structure over here. So this is the proper way of following a proper breakdown. So I should have just trail based on this structure over here. Look at this. Trail based on here. Check out what happened. Price go lower, I will trail based on here. Right? Price go lower, another break of structure, I will trail here. Another break of structure, a small break of structure, I will trail here. Look at this. At this point of time, even if it hit my trail, I would have captured all the way. Look at this. I will capture 44R instead of the 28R. So a pointer to note is, in future, if anything were to happen whereby your original plan, because my original plan is using 5 minute structure, which is not feasible in its time frame because this whole big move over here in one 5 minute candle is so huge. If you were going to trail based on the structure of the 5 minutes, it's all the way up here. It's not a proper trail, and there's no need to be panicked. Go to the 1 minute, trail at least a 1 minute break of structure all the way. Right? You'll capitalize more profit. So in hindsight, even if I will stick to my original plan, look at this. I would have hit my full take profit at 60.18. I would have hit my full take profit at 60.8. So some people might say, come on, 28R is a lot of profit already. But you must know something. My original plan is 52R for this trade. And this really hits me quite a bit. And the second thing is, I wasn't too thrilled about this because I only took this trade in one of my prop account. It's one of my prop account, which I risked 0.13%. Sorry, 0.12% for the trade. So I need to risk 0.12% for the trade at $112. Right? So although it's a 28R, right? Although it's a 28R, I only gain, wait, hold on, yeah, just put, percent. I only gain 3. I only gain like 3% gain for my account because I only traded 0.12%. The reason why I trade 0.12% is you must know that I follow this rule strictly. I have no regrets about this. It's just the way how it is. Because I actually hit into a drawdown of exceeding 4% for my prop account. That is when I actually de-risk to 0.13%, so that no matter what happened, the worst case scenario is I have to have 56 losing trades in a row to exceed a drawdown that is more than 10%. So this is nothing to regret about. It's just I'm not too happy about it, because just when I was in this the lowest percentage or risk managed, I hit this 28R setup. So that's by and large what I want to go through today. So in the end, this trade was a textbook example of this BRS 1 hour liquidity breakdown, where all the factors are aligned, and this is considered one of the A++ setup out of my all the strategy, the 12 strat over here. This is the number 1 strat out of my 12 strat over here, and it doesn't come by very frequent. Alright, it doesn't. You just need to be right. In fact, less than 5% of time for you to be winning in the long run. So anyway, that is the story behind my 28R trade. A big win, but with some valuable lessons along the way. So next time, I'll be more careful about trailing my stop loss on faster moving markets, and maybe not let the fear of a snapback reaction push me into taking profits too early. If you found this breakdown helpful, and if you have any question about BRS 3 1 minute setup, drop me a comments below. Don't forget to like, subscribe for more trading insights and strategies. I will see you guys again. Smurf Trading signing off.